So, morning. My name's Olaf Islay. I work in the regulatory team at APX. As Derek and Howard have both mentioned, the main purpose of today is to walk you through the operational procedures that will go live on the 26th of November, so that you know kind of the timings and what will change and when. I'm just going to give a quick overview and introduction to market coupling. So, what is the concept that we're implementing, or what is this project that we're implementing? For those of you who don't know, or for those of you who have heard about it a bit, market coupling is a way of integrating electricity markets by using one single algorithm to connect the day-ahead auctions in each participating member state. Why are we doing market coupling? Increasingly, there's a relatively strong body of evidence that there's some benefits to doing this. I've listed out some of the benefits there. One of the benefits is just promoting more liquid and robust day-ahead markets. So connecting each of the day-ahead markets to each other in terms of price formation should make the price a bit more robust and a little bit less volatile. Also, connecting the different day-ahead markets across the cross-border interconnectors means that the prices in the day-ahead markets determine the flows on the interconnectors. And again, there's evidence that means that the interconnectors are more fully utilized and more often flow in the right direction. And particularly for GB, where we have to actually spend quite a lot of money on interconnectors because they're subsea cables, it's quite important to make sure that those assets are well utilized. And the final benefit is really to encourage more cross-border trading. So by standardizing a bit the way that electricity is traded in each country, it's easier for traders to think about, well, how's electricity traded on the other side of the pond? How's the price calculated over there? How do I interact with it? That should remove some of the barriers to cross-border trading and make it a bit easier to think about how to trade across borders. The European Commission actually recently published a consultancy study where they came out with a figure of benefits of market coupling of 2.5 to 4 billion a year if it's rolled out on a European level. Now, I don't know how sound those figures are, but that's the European Commission's perspective on the importance of all of this, where they're looking at market coupling as something which is really important to achieving the internal energy market. So for them, market coupling is just one of the key pillars to achieving a single European market. In terms of market coupling projects that have happened in the past, APX has been heavily involved from the beginning. So from trilateral market coupling in 2006, that was the first European market coupling project connecting France, Belgium, and Netherlands. And APX being involved, like being the market operator in Netherlands and Belgium, to then, even in 2011, GB's first market coupling project, connecting GB to the Netherlands via the BritNed interconnector. Again, that was APX connecting our GB day-ahead auction to our Dutch day-ahead auction. So that was GB's first market coupling project. And the project that we're all working on very hard now to go live on 26th of November is Northwest European market coupling. But I think for a very small company, because APX only has 100 staff, for a very small company, we are quite proud of the role that we've played in bringing market coupling to Europe. So from the beginning to kind of the current projects. The project we're working on now, NWE Day-Ahead Market Coupling, what is it? There's kind of two core parts to NWE. There's two big changes that will happen. One big change is that across the Northwest European region, there's 9 countries, but in terms of coupling together the day-ahead markets in those 9 countries, there's about 3 or 4 systems that are currently in place. So one of the big changes in NWE is we're replacing those 3 or 4 systems which currently sit across the 9 NWE countries with one system. And that system's called the Price Coupling of Regions system, or PMB. You'll hear it referred to later in the presentation. So price coupling of regions is kind of a European power exchange project or initiative to all agree between the power exchanges what's this one IT system that we'll use to couple together the day-ahead markets, and then we all agree to apply it in the markets that we run nationally. So that's one of the big changes. The second big change is market coupling for GB. So within the NWE region, one big change moving to one system. The second big change is that for GB, we'll finally be fully coupled over BritNed and IFA. At the moment, GB is only coupled to Europe over the BritNed interconnector. When NWE market coupling goes live, we'll also be market coupled over the IFA interconnector. This map just shows the PCR parties. So these are the power exchanges across Europe which have been involved in creating this one system. There's kind of a difference between full PCR members and associate PCR members. The difference there is that the full members, or the difference is in terms of ownership and responsibility. So the full members have ownership of the system. Associate members don't have direct ownership of the system and have slightly less responsibilities in operating it as well. Interestingly, the system which is being used at the heart of PCR was originally owned by APX, Belpex, and EPEX Spot, and then it was given for free by those three parties to the other PCR parties. At the heart of the system, there's the single European algorithm. Then this map just shows the NWE parties. NWE is a project across those 9 countries, plus kind of the slightly lighter green countries as well, will be using the NWE system, or NWE market coupling will go live in those countries at the same time. But it's those 9 countries where the difference between NWE and PCR is that NWE is a cooperation between the 13 TSOs and the 4 power exchanges to implement the PCR systems. So the TSOs are responsible for giving their cross-border capacity to the power exchanges. The power exchanges are responsible for giving their bids and offers into the same system. Then the PCR system calculates the cross-border flows and the prices, and then gives the results back to each of the TSOs and the power exchanges, who then validate the results. So it's a cooperation between quite a large number of parties across quite a large number of countries, and one common approach to trading electricity. This just goes into the system in more detail, or a little bit more detail, which my colleagues will explain later. In a bit more detail how this works, but as I just mentioned, kind of the PXs and TSOs are responsible, or the power exchanges are responsible for giving their day-ahead order books into the coupling system. The TSOs are responsible for giving their cross-border capacities, so each of the cross-border capacities on each of the borders. Then there's the market coupling system, which is kind of this bit here, which is where the algorithm sits. And the algorithm takes the cross-border capacities and the prices in each of the day-ahead auctions and calculates what the price should be in each participating member state in the day-ahead auction, and also what the flows should be between the member states. And that's particularly important for GB, where our interconnectors are DC. In an AC system, it's not really a scheduled flow. In a DC system, the market coupling algorithm will actually tell the interconnectors how much electricity to flow from one country to another physically. In an AC system, it's just assumed that those are the flows which happened. And then after the algorithms calculated the results are fed back to the TSOs and power exchanges. The power exchanges have a responsibility in their own countries to validate the results, as well as the TSOs, but then take care of the clearing and the settlement. So from a member's perspective, each of the members still interacts with its own power exchange. The member doesn't really need to think about the cross-border clearing and settlement of any of the energy. That's taken care of by the power exchanges. So kind of moving from the PCR system to what's actually being implemented in GB. Some of you might have heard about something called the GB Hub. What's the GB Hub? Who's responsible for the GB Hub? This is kind of an overview of what the GB end of the market coupling system looks like. GB is a bit unique because in GB we've got two power exchanges, APX and N2, as well as having two TSOs. So in most countries there's just one power exchange and one TSO. So they don't really need to coordinate with anybody else in that country to make sure that market coupling works. In GB, we've had to create something called the GB hub arrangement, which is kind of an agreement between these involved parties on how GB market, or the GB end of the market coupling arrangements will work. So for GB, there's really three legs. The first leg is coupling across the BritNed interconnector, which will stay broadly as it is. The APX day-ahead auction coupled to the APX day-ahead auction in the Netherlands via the BritNed interconnector. And then the new part is market coupling over the IFA interconnector from the N2 day-ahead auction to the EPEX spot day-ahead auction in France. And then the GB hub element is the arrangements between APX UK and N2EX. To have infinite capacity between those two day-ahead auctions, because the market coupling algorithm works to take energy from the lower price day-ahead auction and sell it into the higher price day-ahead auction until prices are equalized. So if there's an interconnector with infinite capacity between the two power exchanges, that should mean that the GB day-ahead auctions always come out at the same price. That's seen as important for two reasons. The first reason is to ensure efficient use of the interconnector capacity. If the N2 day-ahead auction came out at a different price from the APX day-ahead auction, then the flows across the interconnectors wouldn't be particularly well coordinated. IFA flows would be responding to the N2 price, and BritNed flows would be responding to the APX price. Both interconnectors are located in a fairly similar part of the country. If you've got one interconnector flowing out just because the N2 price happens to be lower than the APX price, whilst BritNed's flowing in just because the APX price happens to be lower, it's probably not a good use of those assets. The other reason why it's important is because of DEC's decision to use the day-ahead auction price as the reference price for intermittent CFDs. If both auctions come out with the same price, then it doesn't really matter where people trade. They face the same basis risk because they know that there will be one price. If the two power exchanges come out at a different price, DEC's proposing to use an average price between the two power exchanges as the intermittent reference price, which wouldn't be the price at which anybody else is trading in the market. It would just be an average price. So there's two reasons why those GB hub arrangements are important. All four of those parties, BritNed, IFA, APX, and N2EX, have a role in making sure that this works. My colleagues will talk more about kind of the changes or the key changes in GB. If I was just going to highlight three of them, I think the ones I'd pick out are for APX, we'll be introducing new products. At the moment, APX has been constrained in the products that we can offer because we have an embedded market coupling solution with a continent, which has constrained us to just offering hourly products. When NWE goes live, we'll be able to offer the full suite of products in our auction. So that will include hours, blocks, and then smart products as well, which I think John Farthing is going to talk a bit more about later. Another change I'd pick out is the second auctions, which again will be a new feature. There'll be certain trigger points at which APX may open, time given, or may reopen its auction in GB to allow you guys to just amend your prices or amend your orders. So under some circumstances, we'll be reopening the order books. One of those circumstances is if the price in GB hits these triggers of plus 500 and minus 150 GB pounds. So if the auction prices reach those triggers, we'll reopen the order books and we'll let you know. And then the third big change is introducing maximum prices or price limits. There are price limits in GB at the moment for the day-ahead auction, but there's been an agreement between power exchanges in the NWE region to harmonise price limits across the whole region. And the price limits which have been hit upon are plus 3,000 euros and minus 500 euros. And there'll be a bit of a trick with how GB interacts with that because the price limits are in euros, which again, a colleague will explain. So those are kind of three of the big changes that I'd pick out and maybe focus attention on in the later presentations. In terms of benefits for APX members, pooling GB liquidity means that both power exchanges will have identical prices, except for in very exceptional circumstances, so less than 1% of the time, which means that it should really mean you're indifferent on which power exchange you trade, or you can just trade on the power exchange which offers the best products, the best service, and on which you can trade at the lowest cost. In relation to that, as I mentioned earlier, APX will be offering more products in our day-ahead auction. As we use the NWE system, we can be more creative with the products that we offer. Also, we'll only charge fees on net volumes. Any netted volumes, so if you're putting in an equal size buy and sell, we won't actually charge any fees on that, which we think is probably cheaper than anyone else. So in that sense, you can save money. And finally, GB will be fully market coupled to the continent. And so I guess that's one big change for GB. Instead of just having 1 gigawatt, it says megawatt, instead of just having 1 gigawatt of capacity for market coupling, we'll actually have 3 gigawatts of capacity for market coupling. And that capacity will interact with the day-ahead auctions around the point at which the price is being formed. So it won't be, the prices won't be that far away. They will interact with the GB prices in such a way that it'll impact GB prices. And it's 3 gigawatts of capacity, but if you take export and import, then it's 6 gigawatts of swing, which is actually quite a lot of interconnector capacity to be interacting with GB price formation. And it'll be interesting to see what happens there. Which is about all I wanted to say. Does anyone have any questions on that before I hand over to the next presenter? Okay.
Sorry, your price thresholds, but will you be, if we go to PAR 1, will you be reassessing it?
It's Ofgem's EBSER.
Yeah.
Just looking at Ofgem's EBSER, PAR 500, the cash out price never really goes above 500. And even with the EBSCR, they're talking about vol being plus 3,000. So, which is about the same as that price limit. Those price limits are interesting because they reflect the anticipated volatility in Europe. And just keeping the GB cash out at PAR 500, dampening prices probably implies that we wouldn't expect GB prices to be as volatile as they are in Europe. So from that perspective, it's probably moving GB a bit more in line with those price limits. Which is one thing we said to Ofgem. Any other questions on the high-level stuff? Okay, thank you.